Good afternoon, ladies and gentlemen, and welcome to this week's trade review session. As always, if you have questions, then please ask away, and I'll do my best to answer those during the next 20 minutes or so. And then, if I'm unable to answer them, I'll do my best to answer them over the course of the weekend. But yeah, ask away, anything of interest. And I'll do my best to respond. Markets this week have been a bit kinder to me. I know that some of you had very successful Mondays and Tuesdays. Monday and Tuesday were good for me. Unfortunately, today's not so good. Like if I was going to characterise the week in terms of the way that it's gone, the mornings have been very good. The afternoons have been quite messy. So as soon as that opening bell has gone or rung in New York, the trading has not been quite as successful. So, I've been trying to finish my days off early, break them up, make sure that I'm not in front of the screen too long, not suffering from fatigue in terms of looking at the screen too often. But equally so, making sure that there's a bit of variety to my day. So making sure that I get back and do a bit of exercise each day, and that in essence, I think what's happened over the last 3 weeks or so, albeit election, albeit the fact that there was a bit of volatility in the market, is I've probably traded needlessly. So whether that's been as bad as forcing trades. I just think the more often that you're in front of the screen, the more often that you're looking for a trade, the more often you're going to trade when you really don't need to. So this week I've tried to focus on trading around the opening bell in Europe, trading around the opening bell in New York, and then ending my days quite early. There is a lot of volatility in the last 15 minutes of trading. We saw a big ramp up yesterday. We've seen big sell-offs as well during the course of the week, and in general, the markets have been quite volatile. Obviously, we have a president-elect now with Joe Biden. Donald Trump is doing his best to hang on and disrupt things as much as he can, and he can continue to do that through to till January, and his followers can still suggest that he's going to win the election, but that is beyond a bit far-fetched at this stage. Monday saw a huge rally. Just look at the Dow quickly and go back to Monday. We saw a huge rally on Monday after the news of the vaccine started to break. So this is Monday there. Let me just put some crosshairs on this so that you can see what I'm talking about. We see the rally there all the way up to almost 30,000. I think we stopped about 10 points shy of 30,000, but we've sold off from that level. So a big rally around the announcement from Pfizer about the efficacy levels of some trials they've been doing in relation to one of the vaccines, and a huge response to that. I was watching CNBC at the time, and some of the reporters were talking about crying. I think that was a bit too much, but obviously the markets responded very, very well to that, and we saw a huge rally, 1,400 points very, very quickly. There was a decent rally earlier in the morning, which always leads me to question how much people knew. And I'm sure that there will be some investigations into the trading that went on prior to that. But what we've seen since then, so on Monday, lot of rotation. We saw a big move to the downside in gold, so they counteracted each other. So a lot of people who've been holding gold over the last number of weeks and accumulating a gold position were keen to get back into the equity market. We always have this fear of missing out, and with that big rally, there were a few people that were late to the party. Obviously, as I've said already, rallied up towards 30,000 before we dropped away. Yesterday we dropped below 29,000, just back above that, or in terms of the index, or in the cash index, we're about 300 points above that at the moment, about 200 points in the futures index. So the reason for the drop off The rally, number one, was too hard, too fast, too quick, and there were a lot of stops being triggered, I would imagine, on the way up, and then we fell back to 29,500 fairly quickly and traded around that area for a while before the market started to ebb away from that point. And as I said, we've been down to 29,000 before regathering to where we are at this point. So caution, the vaccine isn't available now. It's going to take some time to come to the fore. There is going to be limited supply for a while. There's obviously an awful lot of pent-up demand for the vaccine and ongoing demand for the vaccine. So it's going to be a long way or a long time until we see the amount of supply that we need to make things safer in the world that we live in. So caution around there. You've got this immediate rotation out of gold, out of some of the safer stocks, if there are any, and back into growth stocks, cyclical stocks that tend to do well. So the airlines have benefited, banks have benefited, also travel and tourism as well have done well. So the sell-off was in the technology stocks, which had been so well bid over the last while. So a fear that some of the online stuff, Zoom being one case in point, some of the online stuff that's been going on over the last number of months, both that but from a media perspective and from an online perspective, saw the technology stocks sell off. So in terms of our results, or my results, they're not ours, they're my results for the week. You can see on Monday, very fortunate that I wasn't in a trade at the time of the vaccine announcement, which was fortunate or unfortunate, whichever way that you look at it. I've spoken to a few of you were long just prior to the rally commencing and benefited greatly from that. I didn't have an index position on. I think I might have had a gold position on at the time, and gold started to sell off, and I probably took my profits a little bit too early. But you can see that my positions changed during the day. Very much a seller in the early part of the session, a buyer in the latter part of the session on Monday, but a good return, 605 pips. Couple of stopped out a couple of trades, or took a loss on a couple of trades early on Tuesday. One stop there in the DAX, and then fairly consistent days, Wednesday and Thursday. No stops on the Wednesday, and then on Thursday a couple of trades that I closed out, both of them gold, and then today a very slightly negative day. Still got 4 trades left open. Could well hold the euro overnight. Happy to be short above or at around the 118 level. I don't really see any huge upside for the euro over the coming number of days, and I will definitely close out the DAX and the gold trade this evening. So, but obviously the gold trade early in the morning, as you can see, I'll just highlight these. So you've got the gold trade first thing on Monday morning, 60 pips, again on Tuesday, 35 pips, again on Wednesday, 23 pips, 42 pips on Thursday. So selling gold early in the morning on each of the days this week has been very beneficial for my trading. Unfortunately, it went the opposite way today, and I stopped out as we rallied up towards 1897. I don't think from the time of entry, there were a couple of occasions that we might have been 10 or 15 pips in profit, but it never reached a target that I was looking for. So gold has been a bit painful today, as with the early DAX trade. So the 2 early trades today haven't been successful at all. And like I say, I've still got 4 trades to unwind. So Andrew is saying that he sees some traders starting with small lot sizes in the morning and increasing lot size as the days goes on if they are winning trades. What are your thoughts on this? I suppose I'm always a little bit contrarian in this, Andrew. I mean, when some people reappraise their risk levels on a daily basis from a percentage perspective. So if you have a 5% risk level, you lose money, or so your monetary value for that 5% risk might be $500. But if you lose $500 that day, the next day your 2% risk is only $400. So you're always altering the size of the trade. It's not something that I've ever accepted into the way that I trade myself. In my head, I have a nominal account balance, and my trade size is always the same. So, and it's something that comes. I'm not going to say it comes with experience, because I don't think that's true. It's about being comfortable with the risk that you have on every trade, and if you, whilst factoring down in terms of a percentage, is going to keep your account safe. And I think for people who start off with reasonably small accounts, I think it's the right way to go. But if you have a reasonably sized account and you're happy with the risk exposure on each trade, if I was worried that the trades were going against me too consistently, as they've done over the last 3 weeks, I would reduce the size of my trade, but but not from a percentage perspective, if that makes sense. So I might do half the size of the trade until I'm regaining some confidence that I'm starting to get the markets right again. So the trades this week have been the trades that I put on in the indices, I think without question, have all been at 0.1 of a lot. The trade size in some of the gold trades have been a little bit bigger, and equally so the euro has been a bit bigger. Sorry, James is asking me to lower the screen, so I'll lower the screen there so you can see the trades, James. So starting off with smaller trades in the morning, and then moving on to larger trades if you have a winning day. It's one approach, and obviously people have different approaches. It's not something that I've ever done myself, and I don't think I'll be starting. It's, I'm looking at a monetary exposure. I know that 0.25 or 0.1 of a lot will give me X amount of exposure to the market, with a stop at a certain level, and that's what I'm looking to do. I think sometimes if you factor down your trade size as you if you lose money, equally so, I don't increase the size of my trades if the account is positive. So I don't go from 0.25 of a trade to 0.3 or 0.5 just because I'm making money. I'd rather take the money out and keep my trade at a similar level, and that's always been my approach to things. And I think sometimes, I think I mentioned it last week, I've seen a lot of people who factor up their size when things are going well, and then they might take 2 or 3 more positions than they would normally. And unfortunately, what that means is if the market does start to go against you, you're going to have a much smaller movement is going to wipe you out. So for me, it's about keeping things at a constant level. Excuse me, so that's not consistent, but at a constant level, which is more about the monetary exposure to the market. So Mark is asking, why did I carry the gold trade overnight on Wednesday evening but didn't carry the gold trade overnight last night? So I'm just going to put this back down again. I think, James, you'll have seen what you want from that particular point. So the gold trade on Wednesday, I have to try and remember which one it was. I think on Wednesday what I did is, you'll find that I had some, I put some fairly tight stops into the gold trade on Wednesday. So I think it was the one at 1865.50, and it was and again, you can pull me up if I'm wrong on this, but I think the market was trading around 1865. So the take profit was at 1867. I think the stop loss was probably around 1862. So they were quite tight stops. It wasn't going to do me too much damage either way. I was up, as you can see, 200 or so pips on the day, and we were trading at the level that the market was currently at. So I wasn't too worried about it. I think the trade that stopped out yesterday is the one there in grey. And on Thursday I just got the note saying it was a sell, so it was a short there at 1871, and I closed that out at 1879. The difference between the two, if I can be clear on this, is that I was roughly at the market on Wednesday, whereas the trade was a good bit against me on Thursday. So it stops in on Wednesday but took the loss on Thursday. Part of the reason for that is the Japanese market, or the Asian markets, are usually quite well bid from a gold perspective, and it tends to overrun. So I was already fairly deep into the trade. I had a couple of late trades in the Dow that returned about 50 pips, and it was just a decision to close everything down. But I think the key difference between the two is we were trading at the market on Wednesday, and the trade was already heavily against me on Thursday. So that was the main reason for stopping out. The buy, if I am going to run a trade overnight, or a gold trade overnight into the Asian time zone, I have a preference for it to be on the buy side rather than the sell side, because, as I said, it tends to be a little bit overbid during the Asian trading session, and that really is the only reason for that. Having a good week, was it worthwhile waking up this morning and seeing gold another $10 or $20 against me? I think one of the other factors is COVID-19, record number of cases in the US. I think that's only going to get worse for a while. So you've seen this huge rotation from gold back into the equity market. So the equity market going up 1,400 points on Monday, gold being sold off $80. So they're with this increase in coronavirus cases, there is a chance that gold will become better bid. So I don't really want to be shorted overnight. I don't really want to be long at intraday trading, because I think, I still think if the market starts to sell off a bit, gold is going to come under pressure. But if you see a big move, there might be that rotation back into gold, or if the COVID-19 cases keep increasing as they are at the moment, the play may be for investors to buy more gold as well. As I've been talking gold, and I could have closed gold a few minutes ago, probably just before I started this session. So the markets have moved a little bit against me in terms of gold, the DAX and the euro since we've been talking. The euro, I'm almost definitely going to carry that overnight. I don't mind the exposure. It's quite a big trade. Whereas the gold, I think potentially we'll see a bit of a sell-off, although it is a Friday. I'm looking for a sell-off back down. If I break even on that trade, I'll be happy enough with that. And the DAX looks like I'll be taking a loss at some point between now and the end of the trading session. The 20 minutes is up. I think I answered all of the questions. If you do have anything else that you want to ask of me, then send me an email and I will get back to you. If not today, certainly over the course of the weekend.